Good afternoon, everyone. Pulitzer Prize-winning American sociologist Matthew Desmond says about housing, and I quote, "Housing is absolutely essential to human flourishing. Without stable housing and stable shelter, it all falls apart." Indeed, housing plays a key socio-economic role and is an important indicator of wealth in most developing countries. The UN estimates that the global population will reach 8.5 billion by 2030, with almost 60% of the population living in urban centers. An estimated 3 billion people will need new housing and basic urban infrastructure by 2030. Against this backdrop of rapid urbanization putting pressure on housing delivery systems, many among the urban poor will not be able to afford formal housing without proper housing finance solutions. This puts the issue of housing finance at the forefront of global development agenda. So, ladies and gentlemen, welcome to the first edition of the India Mortgage Leadership Conclave. This one-of-its-kind initiative from India Mortgage Guarantee Corporation, India's first and only provider of mortgage guarantee, and CNBC TV 18 brings together industry leaders, experts, and stakeholders from India's top banks, housing finance companies, and NBFCs to discuss the roadmap for India's development agenda by drawing a plan of action for a sustainable, viable, and a vibrant housing finance sector. I would request everyone, before we proceed, I would actually request everyone to use the hashtag IMLC 2018 and at CNBC TV 18 on all your social media platforms to tweet about the event. That is hashtag IMLC 2018 and at CNBC TV 18. Ladies and gentlemen, to set the tone for the evening, I would like to invite on stage Mahesh Misra, Chief Executive Officer, India Mortgage Guarantee Corporation.
Good afternoon, ladies and gentlemen. On behalf of IMGC and CNBC TV 18, I welcome all of you to the first India Mortgage Leadership Conclave. Housing finance is a very key contributor to the economy. The housing industry is the second largest job creator. The Housing for All by 2022 is an important agenda item not just for the government, but all of us in this room. As a key stakeholder in the housing finance industry, we therefore thought there was value in getting a diverse set of participants in the industry within one room to catalyze thought leadership that could help us in the years to come as we get into a very crucial juncture in the industry. If you look around yourself, you will see senior leaders from the lending community comprising nearly 80% of India's housing finance origination today. If you look around yourself, you shall see statesmen from the regulatory world, both in banking and housing finance. If you look around yourself, you shall see people from senior development finance institutions who have flown in from all over the world to be here with us today. You will see people from the consulting fraternity, people from analyst firms, people from analytics companies, and we are quite delighted at the response this conclave has got that we are getting to you in association with CNBC TV 18. I would now like to request and invite on stage Stuart, who's the head of global development for Genworth, a veteran of over 30 years of housing finance and who has seen mortgages in Mexico, in the United States, in Canada, in Europe, in Australia, and several Asian countries before being one of the founding directors of IMGC in India. Over to you, Stuart.
Thank you very much. I was one of the founding directors of IMGC, but there's a lot of credit to go around, particularly to the National Housing Bank of India, International Finance Corporation, and of course the Asia Development Bank, who are also right by my side. And I have had the pleasure of working and living in a number of countries over my career, and that's exposed me to a bunch of different macroeconomic cycles, and of course housing booms, housing busts, financial crises, financial booms. It's been a bit of a ride, particularly over the last 10 to 15 years. Of course, the one crisis that I'll never forget is the Asian financial crisis, because that was the event that showed us all that even in rapidly developing countries with exactly the right demographic underpinning as well as perceived adequate oversights, that everything could go terribly wrong very quickly. In fact, we like to say that, it's not a coincidence that all those bad loans were originated in really, really good markets. So, of course, the positive side with the Asian crisis is that the economy's recovered on the back of stronger policies and infrastructure, which all helped. Of course, 10 years later, we had a different type of crisis. We saw a global downturn on the back of poor underwriting discipline and poor constituent accountabilities. And this was in the well-developed, theretofore viewed as best practice U.S. housing market. So not only did that crisis hit developed markets in the Americas and Europe, but also hit emerging markets such as Mexico. And since then, we've seen other crises, housing crises, which are largely dependent on economic downturns. And what's amazing to me is that while a few individuals may have predicted this, the financial markets really did not predict this well at all, especially the timing. It's not to say that the financial services group and the financial services sector, they're fully equipped with mitigants for this type of thing. When you look at mitigants, there's a number of trade-offs. You can have all the policies and the guidelines in place that you want, but there's always a cost to that. And one of the most common risk mitigants we see around the world is that lending tends to get restricted to the wealthiest people in a country or within a municipality. The restrictions are broad, and they can vary from things like not investing in technology and the development of non-traditional lending channels to doing something very simple like tightening underwriting guidelines. And an example of that would just be capping loan-to-value ratios. But it's important to remember that these macro and microprudential mitigation measures reduce risk, but they can also reduce risk at large societal cost. And do things like force creditworthy borrowers to wait years to get into homes or to turn to the gray market for alternative financing. And for those of us in housing finance, that means there's an excluded market and an opportunity that goes to waste. So our theme today is how do we manage housing risk in a way that can expand home ownership. And to me, it's exciting because expanding home ownership, when done correctly, is valuable both from the commercial and societal perspective. And as Mahesh mentioned, housing is a major component of any macroeconomic environment. And I think KPMG actually came out with the study that quoted that the job market around construction would be the largest in India, would be the largest segment in India by 2022. But the point, however, is about more than just wealth and jobs. It's about the basic wants and needs of the Indian population, and I think the government of India gets that and understands that because they've made it a priority. But it's not only an Indian desire. We've seen many effective policies around the world go into place, from Australia to Canada to Hong Kong to Korea, all with very good results. So, in closing, this is really an opportune time for India. You have an economy that's one of the few growth engines globally, and I think that's very important. So with that basis, I welcome you with optimism.
Thank you, Mr. Take.